So the problem with natural disasters is that although the idea of disaster is that it's something you can't plan for, actually we have a lot of mechanisms. We have an entire industry that's been based around planning for disaster and financing that, which is insurance and reinsurance. The problem is that's been seen as a market mechanism. It's not typically been as something that can marry to social objectives that governments might have for protecting their citizens, or indeed aid organisations or donors might have for protecting citizens. And so you're always going to have a bit of a trade-off between the market and the social. I think that some of the critical things that you need to think about as a country, as a government, engaging a mechanism like this is who should be responsible for paying for risk. And so is the fiscal responsibility government to try and make sure that we employ capital in ways that support our own citizens? Should it be the citizens themselves? Or is that just something that should happen after the fact for aid to come in one way or another? And so I think that's always going to be a key trade-off. Another big trade-off, and particularly this is an issue for developing economies, is that the type of knowledge you need to model risk well, to plan for it, not just for financial transfer, but to plan for it, that type of scientific knowledge is actually an extensive investment in risk quantification and then in modelling and pricing what risk might do in your country and how you'll manage it. Mostly, anything like that is a proprietary product. You know, people make models because it helps them trade products or because they can sell the models. And yet we want these models before there's a competitive space or a market situation. And so we need to have donors and development organisations that can work with countries to develop modelling in what I call the pre-competitive space and make some of that open access available, and there'll always be that bit of tension. A really critical feature, once you've actually established the interests of your different stakeholders, is to acknowledge that you will never get everybody all happy at the same time. It's a moving feast. I call it an uneasy truce. And so if it feels a little uneasy and you have to keep working at it, then you've probably done something right because you've got something that you can keep working with. But I think that the key things that you need to think about in managing these trade-offs is you need continuous dialogue and negotiation. Even after you have a pool in place or a specific financing mechanism in place, the whole point of these mechanisms is that you continuously reinvest in them, that you work out, you have legislative reviews of whether they're working or not, and you grow them, you scale them according to what you learn by doing it. So continuous negotiation would be one key feature. If you're still having to negotiate it, it means you're doing the right thing. The second thing I think you need to work on is financial literacy. These are complicated products. I mean, most people don't understand the financial markets and capital markets well anyway, and the idea of putting them in the context of looking after the social objectives of a country means you need to develop literacy about what is the product, how does it work, how does it leverage lines of our own disaster budget or our own budgets, so that you understand what it can and what it cannot do, because that's going to be key to your success. I think that a third thing that is really important is celebrating small wins, because actually these aren't big bang products and they're not silver bullets. They're an important part of a complementary structure or suite of ways of planning for and managing risk. And so you need to celebrate when you get a payout and you're able to use it to do critical things. It may be critical things like rehousing people in the first 2 weeks. It may be things like providing food security to a certain number of key families. Tell people about that, celebrate that, and also use those kinds of stories where they happen in your partner countries to show how it could also help you. I think that probably a final thing that is really important is to embed any kind of disaster risk financing in your wider policy making. Financing is only one strand of a policy for protecting citizens and managing risk. It's a very important one, but if it's part of wider policy making, then it can inform things like how you quantify disaster, how you think about contingency planning, and it becomes built into business as usual for government rather than some sort of exceptional thing we do, which should only be done when we have money to spare. And so I think that those would be my sorts of recommendations.